second edition of International Business Summit of MRAI at Bangkok. It's a great time for us to be all of us here together. It's a very, very interesting conference lined up over a span of 2 days, and we have some very eminent, good panelists and speakers who are going to deliberate on various critical matters facing our industry as a whole. Where I think 3 years ago, our president, Mr. Sanjay Mehta ji, and along with our vice presidents, thought of that MRAI should have such kind of conferences outside India, so that our association, which is very well penetrated already in India, should have a larger participation from our Asian community as well as international delegates from across the globe. So I just want to share with all of us present here, this time, this conference has seen registration of more than 670 people coming in from more than 35 countries. I think it's a great achievement. All kudos and hard work to the MRAI entire secretariat led by Mr. Amar Singh ji. So without taking much of your time, I would like to invite our eminent panelists on the dais so that we can start this Ferrous session. First up on the stage, I'd like to invite Mr. Jing, Associate Editor, Metals and Mining, Argus Media. Mr. Z, can you please come in? Yes, Mr. Z has joined Argus Media in year 2022. Welcome. And he is currently the Associate Editor of Asia Fair Experience in Market Analytics and Price Reporting as well as Deep Down Studies. And he is graduated from Royal Melbourne's Institute of Technology. Next up, I would like to invite our second speaker, Mr. Edward Lowe, Associate Editor, Asia Steel and Scrap, S&P Global. Mr. Edward, ladies and gentlemen, a small round of applause, please. Mr. Editor, Mr. Lowe has a 2.5 years experience in long steel and ferrous scrap markets in S&P Global, and he has come up with various nice reports and market analytics. Let's hear from him today. Our last speaker, probably a very unique speaker, and probably she's going to talk about the market. I think everybody in this conference, more than 600 people, want to know, are eager to know about China. I'll invite on stage Ms. Katherine Zhu, Senior Director, Shanghai Metals Market. Ma'am, please come. Welcome. Ms. Katherine manages the global commercial activities across the commodities, iron ore, steel in Shanghai Metals Market. Being the moderator, I have seen a paper and I must tell you it's very, very exciting and giving some very good insights, unseen insights about the China market. So, welcome all our distinguished guests on the dais. Thank you so much for your presence here. I just set the tone of the session. India, we are from India, we love India. India is now world's second largest steel producer, making over 140 million tons of steel. And our share of induction furnace and electric arc furnace, which is the secondary industry, is now close to 58 to 60%. So more than 75 million tons of steel is produced through the scrap route. The country has a current requirement of about 40 to 50 million tons of scrap, and out of that 35 million tons is sourced domestically, and about 10 to 15 million tons is the shortfall which is covered up by imported. Going further, we are going to see a huge quantum jump in scrap requirement within India, and that's why MRAI role comes in. Over the last 10 years, MRAI has been very thoroughly advocating with the government, with the ministry, and with all the relevant officials, including all the stakeholders, that we should get the scrap users, processors in the formalized sector. And we are so proud to say, it is because of efforts of MRAI, we are seeing more and more organized players, big corporate houses, big international corporate houses coming to India, making the investments in the projects, in the technology, in the processes, and there is only one way which this recycling industry is going to go, and that is north. Some of the key issues which are currently being faced by the global ferrous scrap industry include which are directly and indirectly impacting the steel scrap consumption and demand, is that there has been a growing trend of exports of steel products coming out from China, which is putting a pressure on prices overall in all the economies. In India, domestically, the iron ore prices, the DRI or the sponge iron prices have been very competitive. So the manufacturers are forced, or they are taking a call to have a higher percentage of DRI, but they also have to focus, and they are focusing on reducing their carbon greenhouse emissions as well. Availability of scrap definitely remains a challenge within India and outside India, as well as I think in all the Asian countries also. Everybody realizes that scrap is going to be a very critical resource for all of us, and hence we all are here. CBAM regulations coming in and the impact, that is also very, very crucial aspect, and I'm so glad one of our speakers is going to elaborate on that. That's it from my side. Without taking much time, I'd like to invite Mr. Z to please come on the dais, have a presentation. And just a small short note, I've prepared some very, very tough questions for all of you later in the day. So the only way you can escape if you finish on time. Thank you so much. Please, take the dais. Welcome.
Hi, a very good morning, ladies and gentlemen. My name is Jay-Z from Argus Media. So without further ado, let's kick things off. Thank you very much, MRAI, for inviting me to be a speaker. Today I'll be presenting on the outlook of Ferrous and on steel and raw materials fundamentals. So for Argus, we are a leading provider, one of the leading providers for pricing assessments, and we cover a variety of products, for example, for oil, biofuels, agriculture, and we have a variety of services as well covering market reporting, consulting, and conferences. So some of our key benchmarks include US crude oil, European gasoline, European steel, APEC, LPG, and coal. So let's talk about global crude steel productions last year, which stood at 1.8 billion tons. And this is largely stable from 2022. And China crude steel production is higher than the rest of the world combined at 1.02 billion tons, and this accounted for about 54% of global crude steel production. So India was the second largest crude steel producer. I think it was up 11.8% to 140.2 million metric tons, and followed by Japan at 87 million tons. And most European countries reported declines. The EU produced about 126 million metric tons, and this reflects about a 7% decline year on year. So crude steel production from the US was pretty stable, I would say, at 80.7 million tons. I think it was up by only 0.2%, and Russia was up by 5.6% to 76 million metric tons for 2023. So let's take a look at what's been happening this year. The World Steel Association has forecast that demand will rise by 1.7% this year, and in 2025 it's going to rise by 1.7% this year and 1.2% in next year. And this recovery is largely driven by substantial infrastructure investments, particularly in India, which is set to see an 8% rise in steel demand due to broad growth across all steelmaking sectors. So it's worth noting that among the top 5 producers globally, which is China, India, Japan, US, and Russia, only India is seeing strong growth this year. So while global steel markets remain uncertain, ongoing investments in green infrastructure and resurgence in key industries like automotive and constructions are expected to bolster demand in the coming years. So, with no meaningful cut in China, and with China's domestic steel demand not recovering as strongly as anticipated despite stimulus measures, we're starting to see more exports coming from China, and this is because local mills need to maintain production and profitability. So in the first 5 months of this year, China's exports of finished steel products rose by about 25%. And in May alone, we saw exports reach about 9.6 million tons, and this is up by 15% year-on-year in May. So overall, Chinese steel exports are on track to maintain at high levels. Okay, but they are looking to face challenges from rising crude steel capacity in Asia, from import restrictions such as anti-dumping, import tariffs, and forex uncertainties. So what about India? India's steel and scrap imports have been growing steadily since COVID in 2020. And India saw a significant rise in steel imports, with around 8.3 million metric tons of finished steel products imported during the first 5 months of this year. And this is up by 38% year-on-year. And this shift has turned India into a net importer of steel, which is a change from its earlier position as a net exporter. And this surge in both steel and scrap is attributed to strong domestic demand driven by extensive infrastructure projects and construction activities. Now, the IBS2024 has revised its forecast for India's domestic steel consumption to 9 to 10% in FY 24-25 from its previous estimation of 7 to 8%. And this is really due to strong government capital expenditure and robust demand from sectors like housing and real estate. But then again, India's steel mills are still facing pressure on margins, okay, and this is due to mixed impacts on various market dynamics. So there are pressure due to rising inventory as steel output growth is anticipated to outpace domestic demand, and this inventory build-up may lead to squeezed margins, especially since export sales are not expected to rise sharply due to global market conditions. So additionally, factors such as the impact of EU's CBAM, which I will talk about in detail later, looks to impose additional costs on India's steel exports. While iron ore prices have been relatively steady at about $100 mark, coking coal prices have been volatile, and this is influenced by global supply constraints and high demand from steel producers. The overall trend indicates rising costs, which affects production for steel in India. So now let's take a look at scrap suppliers into Asia, particularly into East Asia. So the two biggest suppliers are the US and Japan. And supplies from these two nations have been declining since 2020. We saw 18 million tons in 2021 to about 16 million tons last year. And that's really due to increased domestic demand, supply chain disruptions, rising cost processing and shipping costs. So for Japan, the trajectory seems similar with the exception of 2023 last year, as Japanese exporters benefited from competitive pricing and shorter delivery time into Asia, thus making Japanese scrap more attractive compared to alternatives. So the rise in export volumes also coincided with stable domestic demand, suggesting external factors such as increased procurement from key Asian markets like South Korea, Taiwan, and Vietnam. So imports into these countries were broadly mixed, I would say. So Vietnam's steel industry saw positive signs of economic growth last year, which explains a bump in its scrap imports. And Taiwan also benefited from a strong USD to the Japanese yen. So this is why we saw rising scrap imports into the country as well. But South Korea, unfortunately, saw underwhelming domestic steel demand. So as such, scrap imports was not as much as well. So this reflected a cautious recovery influenced by both domestic and global economic conditions. So this year we start to see a divergence in Asia-Turkey scrap prices. Traditionally in the past, Asia steel scrap buyers, they tend to look towards Turkey as a pricing indicator because Turkey is the biggest buyer of scrap globally. But since the second quarter of this year, we start to see the spread widening, and the widening of this spread is largely driven by upbeat Turkish price, and in Asia not so much. We are seeing a seasonal lull, which is why scrap prices are under pressure because Asian mills are trying to facing the summer lull. There's less demand for domestic steel, and also higher electricity rates, forcing mills to cut production or shift productions to the night time where the rates are lower. So very quickly, I'd like to talk about CBAM and how it works and how it impacts Asia ferrous industry. So the CBAM stands for Carbon Border Adjustment Mechanism. It's just an EU policy imposing a carbon tax on imports from countries with less strict climate regulations. So as of now, broadly it covers steel and iron, cement, aluminium, fertilizers and electricity, aiming to prevent carbon leakage and promote global emission reductions. For now, there is no financial impact, but there are reporting obligations for importers. But starting in January 2026, importers must buy CBAM certificates to cover the carbon emission of these goods. If importers cannot provide the emission data, they will face CBAM's punitive default values for emissions. So by 2030, it's likely to expand beyond these 6 products as EU tightens its climate policies and carbon reduction targets. So on this note, I would like to just point out very quickly what's happening in Europe and its bid to go green. We noticed that the EU is slowly shifting to EAF-based steel production as it's less polluting. From 2014 on the left, you see the percentage of BOF to EAF is roughly 60% to 40%, but in the span of 10 years, it's slowly, gradually moving to 55-45. So this shift supports the EU's broader environment and economic strategies, positioning its steel industry for sustainable growth and global competitiveness. So what's the impact on Asia then? So the impact will be those countries that are exporting to the EU. So in 2024, India's iron and steel exports to the EU has been notably robust and reflecting a strong demand from European markets. And industry experts have said that the start of CBAM in 2026 could impact up to 40% of India's annual exports to the EU and potentially reducing profits and market share for Indian steelmakers. So for China, we mentioned steel exports were high, but to Europe it was a decline primarily due to rising trade protectionism and ongoing inflation in Europe, which has impacted the competitiveness of Chinese steel in EU markets. So to mitigate the CBAM effect, steel producers from these countries will need to adopt cleaner technologies and reduce emissions to align with global standards. So just for concluding thoughts, there's more emphasis in going green, less emissions and so on, so we can anticipate more upcoming EAF capacity in the years ahead. Scrap metal will become a strategic raw material. So as such, we can anticipate more and more protectionist measures from countries who are looking to keep scrap within their own countries. And as there's one key indicator to look out for this year is the US presidential election in November. Biden has officially dropped out of the race, but there are lingering concerns on who becomes the new president of the United States. And if you recall, there was a tit-for-tat trade war in 2018, and generally the outcome of this election can have a sizable impact on global and broader commodity prices, which includes steel, scrap, iron ore, and coking coal. And with that, I've come to the end of my presentation. Thank you so much.
That was just in time. Thank you so much, Mr. Jing. I would now like to invite Mr. Edward Noel from S&P Global, sir. Please. Thank you.
Alright, good morning everybody. My name is Edward Lau and I'm the primary editor for Asian Scrap Markets at Platts. Thank you very much MRAI for the invitation to speak at this conference and about the topic of scrap's growing importance in India's and many other countries' objectives of lower carbon emissions in steelmaking. I will also be providing an update on the latest developments in the key Indian and Turkish scrap markets. So to begin with, I would like to quickly touch upon the current picture of India's steel industry and the decarbonization pathway. India currently has a crude steel capacity of over 163 million metric tons per year, and it has an ambitious aim to ramp it up to 300 million metric tons by 2030. So our Platts analytics team considered that target to be unlikely, but estimate that our crude steel capacity could reach 200 million metric tons by 2030, and production itself could reach 186 million metric tons. The Indian government's focus right now is on economic development, and high crude production is needed to meet economic goals and infrastructure growth. But it has set a carbon neutrality target for 2070, with a roadmap still being developed. This is ambitious given the current emission standard we see in India. The steel sector is one of the largest emitters of emissions. Furthermore, the growth in steel capacity is predicated on the BF blast furnace, BOF route, which involves the carbon-intensive processes of sintering and coking. Initial expectations for the steel industry's expansion strategy is an increase in blast furnace-based capacity due to decent iron ore reserves, while India is also planning to secure more met coal supply through increasing domestic capacity and imports. The ratio could tip to 30% EAF/IF to 70% blast furnace from the current 60% EAF/IF to 40% BF ratio. So how can the Indian steel sector emit less while producing more? If India wants to meet its decarbonization targets and to reduce the environmental impact of producing more steel, it's imperative to see how much more scrap can be used in not just the EAF/IF route, but also the blast furnace BOF route. So there have been some promising signs for the growth in ferrous scrap supply chains in India. We have seen major steel makers such as Tata and JSW open several collection centers and processing yards with shredders to support scrap inflows. The government has also initiated the National Steel Policy in 2017, which has stated that actions will be initiated to increase availability of ferrous scrap through cooperation with various ministries. However, the industry is currently still considered immature, with a national Indian domestic ferrous scrap specification guideline yet to be set in stone. In addition, the domestic supply is, as mentioned just now, simply not enough for the steelmakers. And compared to other developed economies such as US and Japan. Therefore, there is a need to import a significant quantity of steel scrap. So let us take a look at the import volume and the price graph for India over the period leading up to 2024. Ferrous scrap imports in both container and bulk shipments to India have been rising over the past few years to touch a high of almost 10.86 million metric tons in 2023, which is about 30% higher year on year. However, coming to this year, we have seen an overall drop in imports, such as since January until April this year, imports fell 21.7% on the year compared to the same period in 2023. So the drop in imports can be largely attributed to bearish steel demand ahead of general elections that took place in the April-June period, but also cautious sentiment following an unexpected election outcome, a lack of clarity regarding construction demand, and the onset of the monsoon season. Between January to April this year, the price of import containerized shredded scrap hovered within $400 to $420 per metric ton CFR Navashela. The assessment was a weekly assessment at the time, and Platts started assessing it on a daily basis from June 3rd this year. So since then, we have seen prices remaining in an even narrower range of $405 to $417.50 per metric ton CFR Navasheva. So going forward, the market is expected to recover as the monsoon recedes and market participants plan new investments and book cargoes for restocking. Longer term, macroeconomic factors need to be favorable to aid capital inflow and result in the fruition of India's infrastructural growth ambitions. So meanwhile, the Turkish market has also seen similar range-bound prices in 2024. In this chart, we can see that the price history for the past few years for Turkish scrap. Prices were extremely volatile in 2022, with the Russian invasion of Ukraine causing prices to reach a high of $665 per metric ton CFR in mid-March that year, and the devastating earthquake in southeastern Turkey and northern Syria generated volatility in scrap prices in anticipation of a rebuild. However, in 2024 so far, we can see that there has been far less volatility in the Turkish scrap market, with prices correcting down as usual at the end of Q1, as scrap flows improved while tightness caused by the onset of winter eased. So prices stabilized and settled between $376 to $390.50 per metric ton since early March. Prices have been especially stable in the recent weeks amid finely balanced market fundamentals. European recyclers recently faced firm HMS collection costs in the Benelux region, preventing softer offers ex-Europe. The Turkish mills, however, faced a loss of global competitiveness in the rebar market due to prices being above $580 per metric ton FOB. This situation, with the Turkish mills trying to protect their outright scrap rebar margins and the recyclers unable to soften offers due to high collection costs, led to the emergence of a key $390 per metric ton CFR Turkey resistance level for both sides in recent weeks. So here we can also see how the prices of deep sea ferrous scrap imports affect import volumes. The Turkish mills have so far imported similar levels in January to May 2024 compared to the same period in 2023, with 8.6 million metric tons imported this year and 8.34 million metric tons imported in 2023, according to the Turkish Statistical Institute. The US and the EU remain the largest suppliers of ferrous scrap into Turkey so far in 2024, and imports from the US grew in the first 5 months of 2024 slightly to 1.77 million metric tons, while imports from the Netherlands rose dramatically from 981,000 metric tons to 1.22 million metric tons. The mill's import volumes have been quite volatile in the first 2 quarters of 2024, as an improvement in export sales of finished steel into Europe supported high ferrous scrap demand, but more attractive billed import prices from Malaysia, China, and Indonesia in February to April, and the loss of major Turkish rebar export destination, Israel, due to an export trading ban in April, caused scrap import volumes to decline in the same period. So the mills have added lots of production capacity over recent years, with the country now sitting at a crude steel production capacity of 59.3 million metric tons in 2023. Furthermore, EU's CBAM will be phasing in from 2026, and there will be a levy on carbon tax on the imports of certain materials, including steel. Hence, there will be a strong demand for EF-produced steel, which Turkey can provide, and thus Turkey's demand for imports of ferrous scrap is expected to remain strong in the long term. So finally for Turkey, we can see an increasing interest in the LME futures contracts, which settles basis the monthly average of the corresponding Platts assessments. This is especially the case for the scrap contract, which reached a record high yearly trading volume in 2023 at about 8 million metric tons traded. So the previous annual high was in 2018 at about 4.85 million metric tons traded. Turkish scrap futures contract looks on track to enjoy another yearly record in 2024, and we have seen another strong start to the year already, with volumes traded for scrap from January to June up by 63.1% in comparison to the same time period in 2023. We also saw a record trading month in April too, with 1.33 million metric tons traded. So, ending off, why are steel scrap prices so range-bound in these 2 years? I think I can provide only one possible reason out of many, based on the facts before me. So in 2023, we saw a high amount of steel exports from China, which reached the highest level in 7 years, and was only lower than the historical highs of steel exports in 2015 and 2016. And expectations of production cuts have not been met. Even the traditionally peak season in September and October saw weaker demand than expected. And from what we are hearing this year, the same trend is continuing. There has not been any significant improvement in the property sector that has used to drive steel demand, and the third plenum, which concluded last week, has only affirmed current measures with no significant changes. Looking at the changes in steel trade flows, we have also noticed that India has entered into the top 10 of the largest importers of Chinese steel in 2023. And my colleagues in London have also heard that a large order of 100,000 metric tons of Chinese billets was booked by Turkey just 2 weeks ago. So China's exports usually follow a pattern of high exports in the first half and low exports in the second half. But in 2023, the exports remain strong throughout the entire year, and again in 2024, we are likely to see the same. Hence, there must be a significant impact on the scrap prices in other regions, and we are currently monitoring further with an eye for the import volumes across the world. So if anyone would like to discuss the ferrous scrap markets or steel markets across Asia, do feel free to reach out to me through my email, and thank you for your time and have a good day.
Thank you, Mr. Aggarwal. Very nice presentation. I would now like to invite our last speaker on this first panel of the day, Ms. Katherine Zhu, Senior Director, Shanghai Metals Market.
everyone. My name is Katherine, coming from Shanghai Metals Market, SMN. We are the integrated information provider in China and also being a very important global pricing reporting agency cross-commodity, covering both ferrous and non-ferrous metal, and also new energy, especially for the lithium and the solar wind energy. So we do also cover the fundamental research across the commodity from the whole industry value chain and providing special consulting services to our global financial and industry clients for over 2 decades. We appreciate for MRAI's invitation to have this opportunity to give the speech, and also we'll be very happy to exchange views with all of you in the following days. So today my speech will focus on the China steel scraps demand, supply, and some challenges. So with the background of the global energy transition and the decarbonization program, seeking clean, renewable energy, build up the closed-loop recycling, circular economy will become more and more important to global metals and mining industry. So this metallurgical flow chain for the mainstream steelmaking process, long process using the blast furnace and BOF furnace, and iron ore coke will be the main feedstocks. Short process using EAF process can 100% using scraps as a feedstock. If we compare the two processing, the carbon emission, we can see the significant gap on the carbon dioxide emission. The long process ranging from 1.8 to 2.5 versus the short process 0.5 to 0.8. So far, 90% of China's steelmaking process are using BF-BOF, while EAF only accounted for 10%, which means electric arc furnace will have high potential to continue get increased. So Chinese government actually are very dedicated to commit for implementation of the dual carbon policy and the decarbonization. So MIT did set up initial target with the short and medium term target on the EAF production. Initially, by the end of next year, 2025, EAF production proportion will reach to 15%, while the target till year 2030 will reach to 20%. In reality, last year, EAF production proportion only accounted for 10%. This is mainly dragged down by the sluggish demand on the property segments and construction. Meanwhile, we are facing with the strong competition from the long process produced rebar and wire rod. So when demand is declining, margin continue to deteriorate, mills will have to choose cut production and keep low operating rate. Considering property considering the property sector will continue facing with the headwind this year and next year, we think it will be quite challenging to achieve the 2025 target, which means the EAF proportion will reach 15%. However, investment on EAF new capacity by leading steel mills players will carried on. So we have the confidence we can achieve like year 2030 target 20% for EAF proportion. The interesting thing is that we have already seen both long process and short process are trying to shifting to producing more value-added products, especially for the flat roll products. If the long process increase their product share and market share for the high value-added products, the market share for the rebar and the wire rod can be accessed by more EAF producers. So this will do good for the industry to do the upgrading. Here's a very interesting theoretic matrix to compare various kinds of feedstock, carbon emission, and energy consumption. Vertical axis refers to the per ton of steel billet energy consumption. Horizontal axis refers to the feedstock matrix in BOF furnace and the estimated CO2 emission. Hot metal, scraps, DRI, hydrogen-based DRI, green electricity for solar and wind energy will be considered. Theoretically, when the scrap adding ratio close to the upper limit 60%, combining with 40% hot metal, so the CO2 emission can low down to 0.89. Supposing 100% use of the scraps in BOF furnace, CO2 emission can further low down to 0.4. So eventually, if more green energy can be applied, so the emission will close to net zero. So this will be very attractive for technology development for steel industries. So top tier players are very dedicated and has very determined to continue to invest in these sectors. The left side curve in scrap usage trend in BOF furnace in China. Currently, to produce per ton of the crude steel, generally consume around 141 kilogram of the scraps. If we convert it in a scrap adding ratio around 14 to 15%. Right side is the latest experimental progress for increasing the scrap ratio by top tier steel mills. So maximum adding percentage reached to 50% into BOF furnace. Along with more scale-up production released to the market, it will encourage more Tier 2, Tier 3 producers to follow the same path. We believe scrap adding ratio will continue to increase in BOF process, plus growing EAF proportion, and scrap demand will reach 300 million tons by 2030. If you compare China's scrap ratio with other leading economies, it is still at comparatively low level, which means China will have more upside room to grow in. On the supply side, actually, our company SMM built a very solid and sophisticated scrap model covering home scrap, production waste, obsolete scrap collected for all downstream end user segments by taking yield loss, end use product service life, collection rate, recycling rate into full consideration to estimate the long-term scrap supply. The left side of the graph shows the domestic steel amount accumulated from year 2049 to 2023, minus those indirect exports such as home appliance, aircon, refrigerator, such kind of product steps, minus those steel amount already being converted into the scraps. So to finally get the total China scrap pool for over 10 billion metric ton. But only 2% being recycled. So if you look at the right graph, in the past few years, the recycled steel was quite stable at around 250 million ton, mainly contributed by manufacturing segments like machinery and an automobile. The proportion from property, construction, infrastructure is a little bit lower than that from the manufacturing. This is mainly because most of the China residential building heavily constructed after year 2010. So the service life not yet arrived. We expected in the coming decades, this part of the scraps will be generated and arriving from, and in the long run from year 2040 to 2050. And the proportion of the comes from the property, construction, infrastructure will grow much bigger, over 50%. Regarding the steel scrap imports, in the past 3 years, the volumes was quite stable at around 550 KT. But if look at a much longer time period back in history, averagely China imported over 5 million per year. This is mainly impacted by the policy changes from banning scrap imports from year 2019, then reclassify it into the resources, reopening imports, but set up the much complicated standards to the import cargo, which is quite different with the global mainstream trading standard. This handle, especially on the impurity residue level, and also on packaging, sizing, cargo mixing requirement, etc. This all hinders global players' interest to ship more scraps to China market. But China still very welcome to continue to import high quality scraps. The standard modification works are carrying on. Hopefully in the second half of this year, we can see some improvement and progress, which can continue to boost the imports in the coming decades. In China domestic market, the government already approved 11 batches of the whitelist for scrap processing company. which is a key supporting measure for the scrap industry to develop. So far, over 800 processing companies are on the whitelist, while the capacity at around 260 million tons. And in the following 2 years, there is a high possibility to achieve target of 320 million tons of processing capacity. At last, to try to say something on the challenges for the scrap industries. As the scrap is the ideal feedstock to help steelmaking company to lower down carbon emission and supply more comparative green products to the market. More leading economies will treat it as the strategic resources. So some countries started to ban scrap exports and want to secure it for domestic usage. So it will impact the future global trade volumes in the long run. Another perspective is the quality of the scraps. Over the past 2 decades, most of the long steel products can 100% used by scraps as replacement. However, to the high value-added flat rolled steel products, the impurity on the scraps will be very difficult to get moved. The scrap adding ratio is limited in high-end products, especially like auto sheets and tin plate. So if any technology breakthrough happens, scrap application and the demand will be more promising. So this is the end of my speech, and I'm very happy to exchange views with all of you going forward. Thank you so much. Thank you.
Yes, amazing presentation, Ms. Katherine. In fact, all of our presentations have been very good. So, my team informs me we have about 10 minutes maximum with us for some good question and answers. So, I have some questions with me already, but I would like to throw in the house open to all our guests over here. You have seen these wonderful presentations. Do you have any questions, any clarifications for any speaker? Yes, Dhavalji.
Okay. Just not taking too much time. I liked your presentation, Katherine. It was those were hard numbers there. The only thing that I found was there was a bit of a contradiction when it comes to the overarching, let's say, policy goals. You say about 10 billion tons of scrap locked in with only 2% of recycling rate, which in itself shows that China is self-sustaining when it comes to its scrap appetite for future, all the growth that we see here. At the same time, there is also focus that, imports need to be there, but there are policies which kind of, make it kind of a little difficult or challenging for imports to come in. Now, if I look at these two slides, and I see that China has also imposed a 40% tax, that's what you mentioned, right, on the exports of scrap. So with so much of value to be unlocked, a low recycling rate, imports being made challenging, and exports also being kind of, you have a duty, a barrier. So what exactly is the bottom line of this? Where do we go? Because as I said, either you need more material, you don't need more material, you have local available, plenty, but still a low recycling rate. So it just doesn't add up. If you can just clarify that.
Thank you so much for your questions. Yeah, this is a very good question. Actually, we have to take these topics into a different perspective to think about this. Yeah. On first they saying about the scrap pool, the volumes, it looks much bigger, very bigger. Yeah. But whether they can be effectively to recycle at this moment, depending on the profit margin. And it's always about the price spread on the market. Yeah. If you please pay attention to the currently the proportion from the long process versus the short process. 90%. Because we can understand like iron ore, coke as the feedstocks, they still have the cost advantage for the hot metal production line. So That is why I mentioned, after for the shifting of the processing line, if more long process producer successfully shifting their products portfolio to the flat roll products, and the market share continue to growing, which means that traditionally like rebar and wire rod, that kind of market share can be granted to the EF players. Yeah. Because if you do not have this kind of competitively running of the process, it's difficult. You have to have the incentives to encourage those recycling companies to deliver more products to the market. Actually, over 70% of the EAF products being used for the construction and property segments, which means this is the rebar and the wire rod products. So they are facing with the fierce competition by the long process producers right now here on the market. This is the short-term phenomenon. But in the long run, it's also a very interesting question whether China will consider to export the scraps to the global market. Like I mentioned, the next round of the first round of booming happened. That was traced back to the 2019. At that moment, China slashed quite a lot induction furnace, which generated huge scraps to the system, to the market. At that time, it is also the starting time. BF and BOF producers started to increasing their scrap usage volumes and percentage. So the next, like I mentioned, since a lot of the buildings being heavily, especially for the residential building, being heavily constructed after year 2010, which means you need to consider about the service life. So after the service life ended, which we expected another booming of the scrap generation time will be from year 2040 to 2050. At that moment, if China, though, also we need to consider about the application level, on the construction side. If at that moment, that China may consider, if the premium outside of China is much higher than the local market, and we do have much surplus volumes, for the scrap, then may consider to export it to the global market. So, hope that answering your questions.
Next.
But I try to add another point, the quality. I think another key issue will be the quality of the scraps. It's not a kind of contradictory concept. On the import level, China still encouraged to import more high quality materials from the global market. And if you look at the contracts for the past 3 years, import volume like 550,000 tons versus the traditional import volumes average like over 5 million tons. So China already realized the quite a big gap on the import volumes. That is, they noticed that because the new standard is quite complicated, especially for HMS, on the packaging, sizing, and on the specification blending issue that hinder the imports. So they are trying to modify the standards. That is why we think that they are working on this right now, and hopefully they can release this kind of policy in the second of the year, which can boost the following year's imports. But I think the key issue is not for the low-end scrap, but it is still targeting trying to get more high-quality scraps to get into China. Thank you.
He knows very well about China quality because he's doing pretty good volumes of non-ferrous. And I believe non-ferrous quality norms are much more stricter when it comes to China. Okay, next question please. Sufyan?
Hello, yes. This is Rajesh Aggarwal, Vice President Bureau of Middle East Recycling. First of all, Katherine, you are encyclopedia. Thank you. I have two questions, one to Edward and one to Jing. Edward, you said that India is still import and India has entered into the top 10 club. So, in one line, is it a blessing or it is a negative point for the Indian steel producer? Because if India is importing and becoming top 10 importer from China, I don't think it is very good for India. You are SNP, you are black, you can highlight on that.
I think this is a very complicated question because we have very different groups of importers. We have the domestic steel makers in India who, of course, would like to see their less imports. But also there are a lot of re-rollers in India who rely on imports. And as we know, currently India's production current capacity is not enough to fit the demand for the full demand for infrastructure and economic growth. So there is still a reason for India to be importing some steel. However, because China is exporting a lot of steel into the seaborne market at the moment, so I'm sure that there's a lot of talk out there of whether the prices will be affected. So we have to see the impact of prices, not just on the domestic domestic market, but we also have to see how re-rollers are able to take advantage of this.
Thank you. Jing, I have a very quick question to you. You said in your presentation that in the last 5 years, the Southeast Asia has been the major importer from Japan and USA. But because of the freight, the volume has gone down. Do you think it is freight or it is the local prices in Japan and USA vis-a-vis more availability of material from the other market? Because you are talking about, you have given a lot of emphasis on the freight. Thank you.
Right, it's not, that's a good question, by the way. It's not just purely freight. I believe there's also increased domestic demand from these regions, particularly in Japan, where prices are quite sustained as well. So it's not just freight. I believe there are other elements, processing, slower connection. So these are some of the reasons for the lower delivery into Asia.
Thank you.
Okay, I think we'll have time for only one more short question. Anyone?
Yes, so good morning. Yeah, good morning. My question is to Katherine. Very nice presentation, Katherine. Just want to ask you one question about the Chinese EAF sector. So the State Council, of course, as we know, has put out some targets for 2025 and beyond. So in the previous couple of years, we have seen energy volatility and especially the hydropower crisis in China affecting the EAF sector and the capacity utilization, because what we are seeing right now is that the BOF sector is close to about 88-89%, while the capacity utilization of the EAF sector is just about over 50%. So what are your thoughts on the capacity utilization and efficiency of the EAF sector going forward?
Thank you for your question. So the first question is on the import duty, right? Yeah. So I think there's always kind of questions on the capacity utilization rate. Yeah. We think this because most of the steel mills, they are both equipped with the long process BOF process and the EAF process. It's because it's also always market driven, depending on the downstream demand. And I think it's also depending on the product portfolio the mills decided to operate. Yeah. So because you need to follow the market. Yeah. So if downstream segments, certain segments is sluggish. Yeah. And so the EF players is running at losses. There's no way they can continue to operate. So the most the first thing for them is to consider is trying to cut production or maintain at a comparatively low level. But it's also, it's moving from different season. Yeah. So for example, right now Q3 it's the summer time. Yeah. Usually it's also the peak season. Yeah. And so keep a relatively low utilization rate is also quite normal. Yeah. And but when Q4 arrives, I think usually it's also by the end of the year you need to catch up the original target set up by most of steel mills. So you will see once margin recovered, you will see the operating rate increase very quickly, rebounded quickly. Yeah. And also, you need to consider both the domestic market and the seaborne market. Yeah, if you know grow ex-China market demand growing, yeah, that can also incentive the utilization rate to increase. Thank you.
Even though I think we are running short of time, I just have a small question for you, Mr. Edward. In your presentation, you have mentioned, there's one line which is quite disturbing to me, that by 2030, you expect the steel making or from IF and EAF in India to go down to 30% and blast furnace to increase to 70%. Coming from secondary industry and scrap community, I have a different view. I can't put a number to it, but definitely I don't think so. It's going to happen at such a drastic rate. So can you please clarify what led you to think that it might turn into 30-70 by 2030?
So I think one key point about this is that India has a large reserve of iron ore, and it's also quite good, high quality. So naturally, blast furnace will have an advantage in producing through the blast furnace route. However, in addition to that, we also see India having a large manufacturing capacity increase. So naturally, we would usually see blast furnaces producing more high quality steel through the blast furnace route. Of course, this is an estimate, and we might not know how much changes there will be. I think this also depends on the prices of scrap, prices of coking coal, prices of met coal and iron ore, and whether there will be large changes to this. We might see maybe prices of scrap dropping. If it drops a lot, then of course the ES and IS will be incentivized to increase production, and there might be more ratio towards that.
Right, definitely. Okay, sir has a question. Sufyan, please.
Thank you. This is for Edward. You told that the blast furnace route will be increasing day by day in India. Your estimate is maybe, but in India, iron ore is mainly used for the production of DRI, and again the DRI used for the purpose through the induction furnace, and they also produce power to reduce the burden of the costing of the induction furnace, and then making the long products. So this is the route which is increasing day by day, and we are not seeing the increase in blast furnace other than the main producers, which are barely 5 or 6 in the country. They are only increasing the capacity with the blast furnace route. Like China, blast furnace and sintering has not become popular in India. Rather, we have chosen for DRI route and then turbine and then induction furnace route. In this way, I think a new measure for beneficiation of the iron ores are also have started, and they are also making DRI out of that. So in that case, I don't see any scene that in near 5-7 years, the blast furnace route will be increasing their capacity in such a substantial way due to the DRI route. Thank you.
Kind of concur with him, kind of, yes. But yes, things can change depending on prices and availability, but the general trend is that, of course, the big capacity additions, huge numbers will come from blast furnace, and they are expanding. It's not like they are stagnant, but at the same time, the existing induction furnace mills are also expanding. None of them is keeping quiet. I mean, given an opportunity, they are looking forward, they are looking ahead. Anyways, very, very interesting discussion. I think we could have carried on this panel for 1 more hour, just like that. But we have some other friends waiting for us. Thank you very much, Miss Katherine and gentlemen, for a very wonderful and amazing session to start this wonderful 2-day conference. I would now like to invite on stage our President, Mr. Sanjay Mehta ji, to present a memento of thanks to Mr. Jing. Sir, please. Yeah. Please come and give a memento, Mr. Edward. call our director, Mr. Shravan ji, please come. Oh, sorry, Shravan ji. Give a memento to Miss Katherine, please. Mr. Shravan is a mill owner in India. Sorry, Sanjay ji, Dhawal ji, we need you here for a group photo. Dhawal ji, I think is yes. Let's all come here, guys, for a group photo. Second session is perhaps going to be much more exciting also. I would now like to invite the moderator for this second session, Mr. Lee Allen, Strategic Markets Editor, Scrap from Fastmarkets on the stage. Mr. Lee has been with Fastmarkets for over 8 years and has a rich experience on reporting and analysis on recycled metal markets. He reports across the globe. He has appeared on various broadcast media and is a well-known figure in the industry. Mr. Lee, most welcome.
Good afternoon, ladies and gentlemen. Thank you very much indeed to Ritesh ji for the introduction. Starting this session, I just want to introduce our panelists for this upcoming panel discussion, the changing dynamics of ferrous scrap markets. First panelist to be introduced, of course, is Mr. Sanjay Mehta ji, President of the MRAI. Hopefully Sanjay ji is in the room. We also have up on the dais with us today Mr. Nitin Gupta ji from RL Steel and Energy Limited. Here he is. Nitin Gupta ji is the CEO and Director of RL Steels and Energy Limited, with a BA Honours in International Business and Business Administration from Regent's Business School in London. He has led the company to become a niche alloy steel maker. Under his direction, the company successfully commissioned state-of-the-art rolling mills from France and Italy. He holds prominent roles in the Chamber of Marathwada Industries and Agriculture, CMIA, and has received numerous accolades, including the CEO of the Year Award at the Asia Excellence Awards 2023 and the Top Importer Award from the Commissioner of Customs, Nagpur. Following this, we have Mr. Osama Nadeem, owner of Better Deals in Pakistan. Mr. Nadeem, please feel free to come up onto the stage. Mr. Nadeem is the Director of Ferrous Scrap at Better Deals, which is the largest ferrous and non-ferrous brokerage house in Pakistan, and acts as a sales arm of the world's leading finished steel producers and recyclers. Osama joined Better Deals back in 2005 at the mere age of 20, and has since helped the company to grow, handling over and around 2 million tons of steel per annum. Osama has witnessed the market crashes of 2008, 2014, and the most recent crash due to COVID in 2020, and has successfully steered his company through these troubled times. Following joining the stage, the final panelist, Mr. Shravan Aggarwal Ji, Director, Guardian Casting PVT Limited. So Shravan Aggarwal Ji is the Director of Guardian Castings PVT Limited with over 20 years of experience in the steel industry. He's successfully enhanced operation efficiency and reduced production costs through innovative initiatives such as implementing the Thermax system. He's known for his collaborative leadership style, and we're delighted to have him on the panel today with us as well. So thank you very much to my esteemed panelists here on the dais. As I say, there's going to be a short presentation from my side to begin with, and then we will crack on with questions, and I'd love some questions from the audience as well when we get to the panel discussion. So hopefully we can have the slides on the stage. Thank you very much. So as many of you know, Fastmarkets, we are one of the leading price reporting agencies in the world. We used to be called Metal Bulletin. We have now more than 15 global locations and more than 6,000 prices across different commodities, including metals, agriculture, and wood and forest products. We have extensive coverage of ferrous scrap across the Asian region with prices in Bangladesh, Vietnam, China, Japan, Pakistan, India, also Taiwan and South Korea as well. And we'll be touching on some of those price trends during this presentation. Now, we already had an overview of some of the steel production trends, so I'm not going to go into this in great depth, but the top line figure is that at the moment this year, in the year to January to June 2024, that's the first half of this year, steel production levels are basically dead even year on year. So increases in some areas are being cancelled out by decreases in other areas. We can see notably on the screen, the Middle East and Africa is growing in size, while areas like North America are actually declining in terms of steel output. And if we look at the country-specific trends, you can see some very interesting movements there, with Turkey up by more than 16% year on year, India up by more than 7% year on year, but large producers like Japan and the US down by more than 2% a pop. China is a very interesting trend, down by 1.1%, but we've heard already today that China is becoming a real concern because of exports of steel. Today I was looking at Chinese steel exports purely on HS codes 7210 to 7214, that's coils and bars, and actually Chinese exports right now for those products this year are the highest ever. This is higher than 2016 and 17 for these products. It's higher than those times where we were talking about Chinese dumping. And in fact, this year we're on for an absolute record high in terms of exports. So Chinese exports are affecting many industries, not just ferrous, of course. We've heard in the non-ferrous sectors as well that large imports of aluminium foil, for example, from China are really hurting Indian producers of that material too. So this is something we're going to be hearing more and more of, is the power of Chinese exports across the markets. We'll be going into more depth on that with the panel discussion as well. Now, steel production, as we've seen in Turkey, has actually helped Turkish import scrap volumes to grow slightly in the first few months of this year. You can see that on a year-to-year trend, Turkish volumes are up slightly, 2.9% on a cumulative basis for the first 5 months of 2024. But from a month-to-month perspective, it has been quite volatile. At the start of the year, you can see that the year-to-year rates were actually quite high for Turkish scrap imports year-on-year. But, you know, in the months, particularly I think of March and April, we were seeing slightly lower year-to-year trends. May, again, picked up year-to-year, but the Turkish trend is slightly above break-even on a year-to-year basis for scrap imports. What's interesting, though, is rebar exports, because as we heard earlier, there has been a reduction in the number of destinations that Turkey is able to ship large volumes to, particularly Israel, where there is now a ban on Turkish exports, but also in Yemen, where there is, of course, a lot of geopolitical problems at the moment. Despite that, though, Turkey has actually increased its market share in other areas of the world, such as in Latin America, and has increased its exports of rebar in the first few months of this year. So that's very interesting, because what we're finding is that the Turkish steel producers are actually preferring to get market share rather than high prices. And that has been affecting margins. As you can see here, margins are down over a long-term average basis. Turkish margins for scrap to rebar, this is FOB rebar versus CFR scrap, they were down around $190 per tonne in June 2024 as an average on the Fastmarkets prices for both of these commodities. That is below the long-term break-even of 208 since 2018. Now, of course, we have to say that these things always shift. The break-even level used to be about $160 per tonne, but we've got to remember that electricity costs have gone up since that, labour costs have gone up since that, inflation is up in Turkey. So we can say that around $200 per tonne is perhaps currently where the break-even margin might be. You can see that the trend has dropped dramatically below that level in the last year or two. So that's concerning for the Turkish mills because, as I say, they're trying to keep market share, but that comes at the cost of margins. In India, scrap import volumes are down, as many of you will be aware. In the January to May 2024 period, down 23% year on year, according to Indian Customs. 2023 was obviously extremely strong in India. That momentum has not continued this year, and we'll be asking the panel exactly what's happened and why. One of the reasons for that, of course, is cheaper DRI sponge iron. That has been constraining scrap importing into India. We can see that recently the margin between DRI to scrap has increased, with cheaper DRI and scrap staying quite stubbornly at firm levels due to perhaps higher prices in Pakistan, firm pricing in Turkey, whereas DRI prices have gone down. That has led to, of course, much more appealing pricing for sponge compared with scrap. And you can see here on the margins, as we saw earlier, that the rebar scrap margin has dropped recently in Turkey, in India, but the DRI rebar margin has actually increased. So those mills using DRI are getting much better realization on the margins right now compared with scrap. That's obviously a concern for scrap demand. If we look forwards, what we see, and this is according to the Fastmarkets research team, higher scrap use expected in Turkey in the next few years, increased construction output in Turkey both this year and last year compared with the last few years before that. That is expected to continue that upward trend, and Turkish steel capacity also expected to increase in the next few years. That would result, according to the research team, in higher consumption for ferrous scrap in Turkey, particularly from the 2025 point over that next decade. On the pricing, on a short-term basis into Turkey, the Fastmarkets research team is forecasting a dip through the end of the summer into the autumn, and then a recovery through the winter months to the start of 2025. I think we've got about 2 minutes 50 left on the presentation. I'm going to devote that to the panel discussion instead of my speech here, but I hope that that was interesting. And if you would like to speak with me about the ferrous scrap markets of any geographical location, please feel free to reach me and get me on this email. Thank you very much. We're now going to pass to the panel discussion. So, panelists, thank you again for joining. Absolute pleasure to have you all here. My first question goes to Sanjay Mehta. So, Indian ferrous scrap imports, as we've seen, are down by almost a quarter in the year to date, according to Indian Commerce stats, despite that continued increased steel production. So, in your view, what is the reason that imported scrap demand is down so much this year?
Thank you very much, Lee, for joining us at MRAI Bangkok. Scrap imports and consumption patterns had changed in India. In the last 1 year of time, we have seen a lot of development in the scrap prices and the sponge iron prices versus the sponge iron DRI productions in India. So people have started choosing different perspective I can see that environment is definitely definitely a concern for the Indian producers as well. But when you see the costing side, definitely DRI sponge is much more better choice for the people who consumes scrap versus DRI and percentage of scrap versus DRI. People were consuming averagely 15-20%. Good producers, good manufacturers will consuming 15-20% of sponge DRI. Now I think so they have jumped into 30 to 40%, 45%. Some of the companies have jumped to 50%, and productions have increased of DRI in a massive level. 3-4 big producers have started productions. So in times to come, I think so like scrap consumption will be, I will not say that it will be limited. I will say that definitely we'll have to see the price factor must be more better, which is the which product is much cheaper available and cost effective and everything. So as on today, definitely scrap consumption has gone little bit down, and sponge and DRI consumption has gone up, and market is little bit weak. But in future also, I will say that sponge is going to play a definitely critical role, and main role sponge is going to play.
Thank you for that. How much also could be attributed to higher scrap consumption or scrap generation, we should say, in the Indian local markets as well?
Because of the growth story in last 10 years, scrap generation have increased closely, maybe about say 30-32 million tons. We are definitely generating scrap in India, and infra boom, everything, automobile high productions and everything. You know, on a good numbers, everything is going on. So scrap consumption is going to keep rising, and we will get good domestic scraps availability. And every year, at least, we will add 1 million tons plus of scrap arising, more scrap arising in India. So that will help to the local manufacturers definitely.
Thank you so much. Coming to you as well, Mr. Shravan Aggarwal, as well on this topic of declining import scrap and also perhaps increased sponge iron consumption. Is there another reason for the drop in scrap imports, or do you think that's the main factor causing this trend?
Despite increasing production, the sales have been very muted in the last quarter, and there has been the inventories of finish has been at elevated levels. It has been a build-up of the last quarter, right from the elections. We had elections in India which lasted for 45 days, where the demand was muted. Then we had heat waves, because of which the construction activities were slow. And now we have the seasonal factor of monsoon, because of which the demand has been low. So it's been a build-up over a period of last 3 months. And because of the finished sales being slow, a lot of integrated units in central, eastern and southern part of India have cut the production of their finished products and are selling sponge. They are not manufacturing billets and rebars. They are selling their sponge. Because of which, if you see with shredded, there has been a discount. Our long products have fallen by $60 to $70 in the past 3 months, but the scrap has only gone down by $10 to $15. There is a huge gap. Cost going on, which is the reason why we are using more of sponge iron now.
Thank you. I guess that brings us to the next question, which is as Indian local sponge iron production, is expected to increase rising in the next few years. Could this, over the long term, also choke off scrap demand? I think you mentioned that as well, Mr. Mehta, just then about whether that's going to be a concern long term. What's your view on this, Mr. Gupta? Do you think that could also affect scrap demand in the long term? Any increased, sustained increased production of sponge iron in the Indian local market?
Thanks, Alan. I think with the increase in sponge iron, as Mehta said, cost effectiveness, definitely more and more, steel plants are moving towards more use of sponge iron. And last 1 year, a lot of steel plants are now putting up their own sponge iron plant as well. They are getting into manufacturing of their own DRI sponge iron, which is again making them more cost effective. So I definitely see that cost is again the major role here, and if sponge iron and DRI remains that competitive, definitely steel making will see a change in, and with new innovations, hydrogen coming into play. So definitely sponge iron might play a better role according to me.
Thank you very much. When we look at India as a steel producer, do we see India as being long-term an exporter of steel grades, or just servicing the local market? I had this conversation with a major Indian steel mill representative about 2 months ago, and he said this is going to be a local play in the future. India will make steel for its own market and not worry about exports. Is that something that you agree with, Sanjay ji, or you think in the future India would be mostly a domestic consumer, or would exports always be part of the plan for India when it comes to steel production?
You're talking about secondary, right?
Secondary and primary.
Primary will definitely, season exports, still a lot of producers are exporting, about 5 to 6 producers are only there. And the exports will grades to the Europe and USA. It depends upon the definitely local market over there. But secondary market, there will be a limited exports from the secondary market. Special grades will be exports, like RN Steel is exporting. There are few grades of the alloy steel, billets and everything, rebars and everything. I think so. There will be exports opportunity for the Indian producers, but only special kind of products will be exports. Not a plain rebar or any kind of structure steel. Definitely there can't be any markets worldwide. And secondary steel will be there. Limited exports to the. If you are making special steel, definitely opportunities will be there. But that at present the volume is comparatively world market volume kind of productions we have, and the volume is less.
Thank you. What's your view of this, Mr. G?
So I would like to add that in India there are 2 types of exporters in steel. One is the seasonal one, as Mehta said, and one is who are always into exports. So we are primarily last 25 years into steel exports. We do exports to 30 countries around the world. And there are many players, manufacturers who always have maintained an export business out of India, irrespective of demand in India or internationally. If India is good, they reduce the export, but they always maintain the exports. I feel India will always be there in the export markets with further increase in the production of steel in India. The exports will rise from India, but as I again said, the seasonal ones will keep coming depending on the market situation. If Indian market is good, they will go out. If the export market is good, they will keep coming in. But the permanent ones who are into exports, they will always be there, and those numbers are steady, are increasing from India. That's what we see. Because export volumes, great, the pricing is always better. Good opportunities in an international market. And as Mehta said, special steel definitely out of India is the game where everyone has to be in. I can tell you my example, being in 25 years in exports. During my first 10 years of export, it was challenging for me because first I had to explain that Indian steel is good, the quality is good. I had to convince them that you can buy Indian steel and then come to steel from RL Steels. But today that is not the situation. India has a brand name internationally. International countries look up to Indian steel. So that problem is finished. So people are now coming to India for more and more steel, and definitely that will give rise to more and more producers get into export market now. Because the game has become much easier than it was earlier. Of course, the international conditions, the international scenarios, like today, exports out of India is very difficult because of the sea freights, but the situation keeps changing.
Thank you very much. Moving on to another very important ferrous scrap market, Pakistan. Pakistan, we've seen, has recently been buying shredded scrap at wide premiums above the Indian market. I wanted to ask the resident Pakistan market expert, Mr. Osama Nadeem, on this panel, has Pakistani steel scrap demand turned a corner? And can it be expected to boost its import volumes in the second half of 2024?
Thank you, Lee. I think you have 2 questions. Number 1 is that whether Pakistan is actually paying the premiums on the scrap as compared to Indian market, and whether it would continue or not. So I think nobody in the world would actually, none of the customers would like to pay the premium unless they really have to. And I personally feel that Pakistan is not in a position that they could pay the premium. It is very important to understand that Pakistan mills have been operating at 40 to 50% capacity, which means they are not being able to sell their finished products in a good way. I won't actually call it a premium because you will have to put in the equation the freight differences. When we discuss about the pricing in India and Pakistan, unfortunately the freights have become very unpredictable. From one region there would be very good freight available for India, and from one region it won't be available for Pakistan. So I think we are doing some miscalculation, number one. It looks very attractive when somebody sees that Pakistan is paying a price of, let's say, $430 or $435 at the moment in containers, while India is not there. I think we will have to look at it in another perspective. If you look at it from the perspective of a seller or a yard selling in UK, and if he is actually offering into Turkey into bulk versus they are supplying into Pakistan, that is not a premium, I would say. It would still be better off selling on docks, and it does not justify it, sell to Pakistan. So I think this is the minimum price at what Pakistan market would have any offer of credit to buy in Pakistan. And number two as well, we need to also understand that Pakistan is one of those markets who are actually solely dependent on the import of scraps. We don't have any sponge iron, we don't have any alternates. The local rising of the scraps are not that much. We will remain dependent on the import market, and whatever best price would be available, the customers will have to pay that price actually. And secondly, to add one more thing, that Pakistan has not been active in many other grades. Like in HMS, we have different sort of specifications what customers expect. We cannot import the auto parts and cast iron. They don't like it. And on top of that, our customs tariff is as such that on HMS we have to pay extra duties. So eventually, paying better price for shredded makes more sense to import shredded into Pakistan. And we won't go for HMS, especially for the auto part, we have to pay 35% duties if there is any auto part available in the HMS. And I think there won't be any HMS which won't have any auto parts or such stuff. But it is very difficult. Grade-wise we are very choosy. That is why we normally have to pay a good price to buy the scrap. That is first part of the question. And the second part, that whether this demand would improve or not in the second half of the year, I personally believe that the demand will improve. There will be natural restocking. Restocking will keep on happening. There have been big gaps in the market. Pakistani customers will keep on buying. And one more important factor for Pakistani customers, in the last budget announcement, the tax structure has been changed. Just to explain to the participants, that previously the furnace people who were buying from the local market the scrap, they could use any of the invoices given by the local parties, and that created problems of flying invoices and fake invoices. So to fight with that problem, now government has announced a new mechanism where they have informed that your only invoices would be applicable, which will be generated against the imports, against your GDs. So if you have that sort of import in your account, only then you will be getting the adjustment of the taxes. Otherwise, any of the local invoices, those invoices would be null and void. So that is another game changer, and the real hit will come by end of August, I would say. We will start feeling that the inquiry is increasing, and Pakistanis would be able to pay better prices to import, because there will be a gap and a lot of people will be resuming to import. So then at that time you can say that Pakistan is paying premium. That would be more justified at that time.
Very interesting. Thank you very much for that. In terms of the financing situation in Pakistan right now, often when I speak with market participants selling into my country, they say Pakistan is a very competitive buyer for ferrous scrap, but we need less of credit. So obviously in the last few years we've seen significant struggles in countries like Bangladesh as well to get letters of credit. How is the situation for financing now in Pakistan as things stand?
Yeah, I think Pakistan is not the only country who is going through these turmoils. There are several other countries, and if I talk about Pakistani situation related to LCs have been improving. We are seeing that the lead time of establishing the LCs have immensely improved. there was time when the customers were not being able to establish LCs for like 25 days or a month. And now on average, I will tell you that it's like 10 or 12 days now, which is pretty reasonable. And the sellers also understand that. And on top of that, there have been recent approval from IMF for another $7 billion tranche. So I hope that all of these things would help Pakistan's financial market would actually revive and things would be back, not back to normal, but it would be much improved as compared to last year.
Thank you very much. A cross-border situation now. The EU's waste shipment regulation overhaul on exports comes into effect in 2027. The local effects of this rule are already in place. How concerned are you, Sanjay, about the regulation itself? Has there been any update in lobbying or discussions surrounding this with South Asian countries or governments talking to the EU about any potential exemptions or how the effects of this waste shipment regulation may be mitigated? What are your opinions on this?
Definitely concern for each and every country who does not fall under EU regime, the CBAM Regulations Act, and it is concern for as well India. And Indian government is definitely very well aware of this matter. I will say that it is not, government has not taken so much serious about this CBAM. They are aware that primary productions will be affected, but they have not taken seriously about the scrap imports will be affected. What whenever we visit to the ministry, of course my ministry, steel ministry is definitely concerned, and commerce ministry is still not very much concerned. They are saying that time will come, definitely we will handle this matter. And I have a gut feeling that Indian government will definitely convince to the European Union that we can categorize OECD companies into India, make audit, get the audit done as per their requirement for the company specific, not the country specific. So whatever the best buyer will be there in India who falls under European regime, I mean to say European audit systems, maybe it can be 50 companies or 100 companies overall in ferrous and non-ferrous, they will get the material in the future. And Indian definitely buyer, as a country will be affected with the CBAM rules and everything. How serious it will be, we have to see in the times to come. As far as the container shipping on the ferrous,
separated ourselves quite successfully, so we'll have to see. But there's no doubt that UK scrap exporters want to be exempt from this because it makes them an appealing proposition and allows them to continue to ship HMS scrap, for example, to India in the next decade, 2 decades, 3 decades. So it will be an interesting thing to see what will happen with that. I wanted to ask you the same question as well, Shravan Aggarwal. Your view on the waste shipment regulation, potential restrictions on EU exports of ferrous scrap to India, Pakistan, Bangladesh in the next few years from 2027. What's your opinion on this? Is it a concern, or do you think it probably will be mitigated in the end?
I think, as Sanjay said, it's a big concern for all scrap importing countries. And in all the presentations we saw today, everyone was talking about that scrap is going to be a critical commodity. So any ban on scrap export from EU is definitely going to be a big concern, especially for people like us who are building about 80 to 90% of scrap. So yes, I think it's a matter of concern, and we should be following up and lobbying with the government for the same.
We look forward to hear progress on this. Please.
With scrap export getting banned from country day by day, you see every country is banning export of scrap, and now EU is coming up with this new regulation. So I feel definitely Indian government will have a way out, because India is a lot dependent on an import of scrap. So either they are going to come with policies which help in more generation of local scraps, or as in terms of export for CBAM, government is working out a way around with the EU. So probably government will have some way with EU on this matter as well.
Thank you.
Lee, 1 second.
Please.
Lee, I would like to ask you, you have any specific study about the UK scrap rising as well as the new project of Tata who is now building up capacity on the electric arc furnace. They have wiped out all the blast furnace routes and everything. What I have learned and what I have heard and realized in my UK visits, that in future, say after 2 years, UK is definitely Tata is definitely going to import material from other countries, the kind of production capacity they are building up, kind of scrap they are going to consuming, and I know definitely response they are going to stop it. They are going to produce green steel, they are going to go with full-fledged with the scrap routes. So it is definitely going to hurt more than the EU to India, than UK scrap to India. UK exports definitely is going to be hurt in the future. That is what I feel, that is what the kind of capacity is building up. They have started the work, they have ordered the furnaces and everything. So it is going to be definitely serious position for all of us.
Good question. So as you know, and as you mentioned, Tata will undergo a change in its furnace type. Its blast furnaces will close down by the end of this year in Wales, in Port Talbot. And from 2027 onwards, I believe, they will start a new electric arc furnace. What I know is that they've been speaking with a lot of the yards in the UK to say, we want high-grade scrap, as high quality as possible, please, for this new plant. So they're telling people to crack on with trying to get this material generated and researching it, how they can do it. It seems like Tata will be producing probably flat steel grades from that furnace, from what we understand. So they will need high-grade scrap, low-res scrap, as they call it in the UK. As a result of that, it is, I would say, unlikely that it's going to affect UK HMS exports, in my personal opinion. But it might well affect sales of, high-quality shredded, busheling, maybe PNS, etc. Of course, the United States is already an importer of high-grade materials even from the UK at the moment, but also from the Baltic states, Scandinavia. It is possible that the UK could maybe import ferrous scrap, as you mentioned, Mr. Mehta, with regards the high-grade materials. So that could be something to look at. And in addition to Tata, British Steel will also change to arc furnace in the next few years. So there could be a big change in the scrap dynamics in the UK. That's true. That's be very interesting to watch. Let's see. Yeah, we'll definitely keep an eye on that here at Fastmarkets. Yeah.
The interesting period will come. Everyone is building up circular economy, green steel, everything. So the interesting period will start after 2 years. You rightly said 2027 for all the countries will have challenges. Now people are feeling relaxed and everything. They are getting scrap. They are watching prices and everything. But 2027 onwards, the journey is going to be difficult for each and every country who are importing as well as arising. There are a lot of regulations, restrictions are going to be placed after 2027. Once EU is done, then other countries will definitely follow that same practice. This is what I am feeling. I don't know anything. This is what I am feeling.
Thank you. Thank you for your comments there. Osama, you want to join in as well?
Yeah, Ali, I think dynamics will also change after 2027. I feel that scrap will remain a very important commodity. The importance will keep on increasing. That's my personal feeling, that it will always remain short. The sellers would be in a dictative position at all times. Whoever is collecting and processing in a better way, he would have a upper hand. And I also feel that we have seen such restrictions in other countries like South Africa. It used to be a lot of exports from there for Pakistan, for India. It has already depressed. And that is in all rights of the mills in South Africa, that they can ask the government to please leave this resource for us, for our use. It's for us. So the same practice will happen in other countries. What will majorly change is that I think people are already working on that they are also trying to put up the plants in the same sector, maybe let's say in South Africa, to use the scrap, convert it into billets and rebars, and then process it. And I think the movement between the countries would change. Maybe it won't be scrap, maybe it would be the semi-finish or something. I think those sort of changes we can also expect after 4 or 5 years. That's my feeling.
Thank you very much. Talking about politics briefly, if we look at the United States, I think we can say that Donald Trump is looking odds on to return to the White House as president. What could be the impact on ferrous scrap from this? Shravan, Aggarwal, do you have a view on this?
The Trump, like they say, the Trump trade, it's always about higher commodity prices. It's an era of making money. highly profitable money-making era while Trump is there. So I think it will be very good for commodities, and with the stance that Trump has on higher tariffs, I think a lot more tariffs are going to come in place, especially on China. I think that will be positive.
We certainly saw last time when Mr. Trump was president that steel prices went up very sharply, of course, in the US with the Section 232. But also equities, steel equities, oil equities, energy equities went through the roof as well. So it'll be interesting to see if that potentially happens again. Anyone else have a view on the US situation? Osama, you have any view on what may be the knock-on effects here?
Yeah, I would agree with what he said, but we need to see that who would be making money. It would be the US producers who would be making money, or it would be the other participants. So I think the time will tell, but hopefully for businesses it could be good, but bad for the other participants as well. I think it will create a lot of hurdles, and again the border locking system and the new tariff and everything. So time will tell, I would say.
Thank you. Coming to Southeast Asia, the region that we find ourselves in right now, we are seeing a very large increase in blast furnace capacity, which is being planned in this region. In fact, the SIASI, the Southeast Asian Iron and Steel Institute, forecasts that by 2026, Southeast Asia will have 57% iron ore capacity in terms of its steel making capacities. The iron ore base capacity would be going up to 57%. In, I think, 2 decades before that, it was just 5%, and the rest was ferrous scrap. So, in effect, we're seeing a large movement away from scrap-based technology, such as EAFs and IFs in Southeast Asia, and towards the blast furnace sector, particularly in countries like Malaysia, Indonesia, countries like this. Not Thailand, in fact. Thailand is, I think, remaining electric arc furnace dominant. So when Southeast Asia is building up such massive blast furnace capacity in countries like these, also the Philippines as well, and a few more, is there any point in South Asian producers like India, Pakistan, Bangladesh, is there any point in really looking at green steel when major countries in Southeast Asia are basically saying iron ore capacity, iron ore based steel making capacity is dominant? What's your view of this, maybe, Sanjay Mehta ji?
Question is that Southeast Asian countries are building up capacity, and the productions 57% are making through blast furnace, right?
Yes.
So
new capacity.
Yeah. So I think so. If you want to produce more steel, the blast is the only answer. You can, from scrap route, you can't make a lot of steel, and simple one steel plant can make hardly maximum 500,000 tons rolling mills, or say 600,000 tons maximum, or 700,000 tons. But if you want to build up massive capacity, then definitely primary is the only route where in one plant you can definitely produce 3 to 4, 5 million tons, and definitely complete the requirement of any country. So secondary will definitely increase, but not definitely is not going to increase like anything. It will be slow pace in the secondary route productions. This is what I am feeling. Every part of the world, it is going to be slow pace, not high pace. Definitely the production is going to increase.
Thank you for that. We should say as well that the Fastmarkets research team forecast that even if blast furnace capacity rises like that in Southeast Asia, scrap demand in that region will still have to increase by around 50% compared with where it was, I think, 2 years ago. So we can see that there will still need to be more scrap in that region, but obviously a lot more iron ore than what was needed previously. So scrap could still benefit in some way. Final question that I have, because I know we're getting into the end of time now. We're looking to the future. Which countries are you most excited about when it comes to scrap demand, when it comes to the purchase of ferrous scrap in the next, let's say, decade? What is your view of this, Nitin, Gupta ji?
Definitely India for me. So definitely the way the capacities are growing in India, the way the development, the projects, infrastructure projects. So definitely one country to watch out today is India for sure.
Do you think India will ultimately become the largest scrap importer in the world, above Turkey?
I'm not sure about that because a lot of new capacities which are coming up is in the blast furnace route in India. All the major players, even in alloy steel, today a lot of players are expanding in the blast furnace. So, but India, I would say India would go more towards generation of its own scrap now. You know, with the new government policies coming in, there is a lot of scrap generation which is happening today will further increase in India, which should, you know, help in replacing some of the imports which are coming in.
Thank you very much. Sanjay, Mehta, do you have a view on this?
What Nitin has said, I completely agree. We are on the, we all are on the same page. I agree with Nitin. Thank you.
Thank you. Mr. Nadeem, what's your view of which countries are you most excited about, or country are you most excited about in terms of scrap demand in the next decade?
I think in terms of the imports, the eyes would be on India and mainly India. And we will see, I don't think China would be importing in near future. So, and if we talk about the domestic consumption, there are big numbers coming out from US. So that is also going to be a problem for the other countries. I don't think there would be any excessive scraps available after 5 years or 7 years, keeping in view the capacity they are installing for EAFs. So that can also be a game changer for everybody. Yeah.
Thank you for that. And as you say, China not looking at the moment like being a scrap importer. One of the main reasons for that is due to price. The Chinese steel scrap imports price that they can pay for the PNS is about $25 per ton lower than what would be required to get Japanese material, according to Fastmarkets research. So China is out of the market for import scrap, as you rightly say. Finally, to yourself, Mr. Shravan Aggarwal, what's your view of what countries excite you when it comes to ferrous scrap consumption in the next decade or so?
Sorry, can you please repeat?
What is the most kind of exciting growth countries you think for ferrous scrap looking forwards in the next decade in terms of scrap demand? What countries do you look at and say that's going to be a big, grower in terms of the import volume or the local consumption?
For local consumption, I think today, while importing, logistics is a major cost for India. Our logistics cost is very high, and with the port connectivity and the overall corridors coming in India, our logistics cost is going to drop drastically in the coming years. I think that will be a driver for our imports, and of course the capex of the government is going to be very high on infrastructure. Like what they had announced in the last interim budget, the present budget was in line. I think the demand of finished products and scrap is going to get better from here.
Thank you very much. It's a great positive note to end this on. So thank you, gentlemen, very much for joining me. It's been an absolute pleasure, and thank you to everyone in the audience as well. I've been told that we need to wrap up the session, and I'm going to give some awards now to the esteemed panelists here. So thank you very much. The first award is to Mr. Nitin Gupta ji, Director RL Steel and Energy Limited. Thank you. And the second award is to Mr. Sanjay Mehta ji, President MRAI. Thank you, Sanjay. Next we have an award to Mr. Osama Nadeem, owner of Better Deals in Pakistan. Thank you. And last but not least, thank you very much to Mr. Shravan Aggarwal, Director, Guardian Castings PVT Limited. Thank you.
think the moderator here, D. Allen, he definitely deserves an award as well for conducting this session very beautifully and so much of good information there.
Excuse me, ladies and gentlemen. We are breaking for lunch. We'll start at 2 with the battery session. Thank you.